Welcome to the Markets Happy Hour podcast, a weekly markets update for investors the world over. Each week we discuss inflation, geopolitics, interest rates, equity markets, and other asset classes. To try to answer the question, what does this mean for my investment portfolio? Let's dive in.
Getting onto that technical theme, there were some very interesting charts this week about what it is that's been driving some of this volatility. We know that the momentum on the way up can also be accompanied by volatility on the way down, momentum on the way down. But this chart from Societe Generale is intriguing because it plots the UK, the Eurozone, APEC ex-Japan and Japan, and the stock volumes in US dollar as a percentage of the global total. So remember, we are not putting the US here in terms of ranking, but clearly the balance of the global total is probably represented by US volumes. So we're not even speaking about the market cap of markets here. We're simply speaking about the volume of trading. And what we can see is a dramatic fall off percentage-wise over the last 25 years from the Eurozone, from the UK, and from Japan in terms of how much activity does it represent as a percentage of global volumes. What we have seen is the APAC, so the Asia Pacific ex-Japan, ticking upwards, but a very notable steady decline from the UK and the Eurozone. And whereas this would certainly align with our experience of lower retail participation, lower equity ownership in general, and just more of a disconnect between Wall Street and Main Street in UK and Europe, we've also seen shrinking stock markets, particularly in the UK. And we know that as the US stock market has grown and single stocks have soared in market cap, that it is a somewhat anomalous situation when we have one single stock represent more than an entire country's stock market. But that's the current situation we're in terms of the mega scalar companies. But I will say that the interesting aspect and observation from this is that those stock markets where there is a high level of mom and pop or retail involvement have tended to show much more volatility, particularly in the momentum names. So we have definitely seen this in Asia Pacific, particularly in Korea. And I'll show a chart later, which we spoke about before, but it indicates just that growth in the single stock leverage ETF. So if that's a representation of the risk appetite there, that is definitely a sign of quite an exuberant and I'd say hot behavior from the individual retail stock owners. Europe looks sleepy by comparison. What we're seeing in Europe is that there is very little trading activity, a fraction of what's seen elsewhere, but this is equally leading to the momentum strategies in Europe being more resilient. And this is an intriguing reality we're seeing here, that even if there is a similarity in terms of the names and the sector across, say, the US, Asia, and Europe, if these names are held in a different way, i.e. if the technical factors are different across the different markets, there could well be very different performance by these stocks. And that would suggest that Europe could be, again, another good diversifier when it comes to the momentum names.